Blah 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 blah. Go live. Hello everyone. Welcome to this week's live stream. So we've started doing these a bit more regularly now. So what we're trying to do is do them at least twice a month at the end of the week on a Friday, and it's a look back at the week just gone and a look ahead to what might be coming up. So hopefully everything's working and everyone can hear me. Any problems, just let me know in the comments and I'll see if I can fix it. Let's just go through the risk warning first of all. So we're going to spend a lot of time this evening on the platform. Loads been happening in markets this week. It's been a really good couple of weeks trading for me personally. I hope it's been good for you. We've seen some of these trends really get a move on this week. But let's go through the risk warning first of all. This presentation is only for educational purposes. It does not contain and should not be construed as containing an investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 75% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. So that's the risk warning done. So as usual tonight we'll spend, I don't know how long we'll spend, maybe 45 minutes talking about markets and looking at markets, looking at what's been going on in markets, where the opportunities might be. As usual, if you have any questions, any markets you want looking at, please pop them into the chat and I'll take a look at them and we'll try and figure stuff out. But it's been really quite the week, isn't it? Or it feels like it's been quite the week. I've lost my presentation already. Right. We should say, of course, I'm doing this with Capital.com tonight. You can trade CFDs, contracts for difference, foreign exchange, and also spread betting. If you're based in the UK or Ireland, you can do spread betting now with Capital.com. Tax-free profits, of course. So if you go to the website Capital.com, you can open up a spread betting account, open up a CFD account, open up a demo account, download our app, all that sort of stuff. So if people do that, that'd be good because they pay for all of these. So if we go and try them out, that would mean we can carry on doing them. Right. Important events for next week. It's quite a lot going on next week, even though it's Christmas week. Traditionally, it's clearly something of a quiet time in markets, but you'd wonder if that is going to be the case this time round, given that most people are not going to be going out for a 4-hour Christmas lunch. Most people are probably going to be either stuck in the office or stuck at home. So maybe we will get some more volatility next week. But Monday, China interest rate decision. Monday, early hours, Monday morning. Tuesday, the 22nd, UK GDP, US GDP. So the state of the UK and the US economy. So that could be interesting. Then Wednesday, the 23rd of December, EU GDP. So European economic data. So it's really interesting. Some big macroeconomic figures next week. So they're going to be really interesting to watch. But let's get into the review of the week. All right, let's see what's been going on. So if I whiz through this stuff very quickly, then we'll jump onto the platform. Stock markets. We put out an S&P 500 video yesterday. All still positive. US markets are at or near all-time highs. We'll take a look at those in a bit more detail. I should say, of course, if you're watching on YouTube and you don't subscribe to our channel, we put out 3 to 4 different videos during the week. So if you subscribe to the channel, you'll get those. You'll be notified of those when they go live. So we put out regular market videos throughout the week. Gold and silver had been under pressure for some time. Silver's the really interesting one, I think, out of the metals this week. But gold rallies back to a 1-month high. Silver rallies near a 3-month high. I think that $26 an ounce level on silver is pretty important. When I last looked this afternoon, it had pushed through by about 8 cents, only 8 cents. But silver's interesting. And a weaker US dollar has helped both of these strengthen recently. Bitcoin, of course, fresh all-time highs for the crazy cryptocurrency that is Bitcoin. Absolute incredible performance last few months, but we'll take a look at that one as well in a bit more detail. Breaks through the psychological $20,000 level, and I do think that's going to go further at the moment, but we'll talk about it in a bit more detail and take a look at it. I do have a trade on crude oil. We put a video out this week. There's lots of really bearish commentary for 2021 for crude oil. OPEC are very cautious on production. Clearly the vaccine is there, but there's rumblings that we're not going to see any economic effects for the first 6 months of next year. But despite all this fairly downbeat outlook, oil's at 9-month highs. The price action is going completely against the chatter. So $50 next for oil. We'll take a look at that. Foreign exchange, the US dollar, the dollar index hit fresh 2.5-year low. Really big moves this week, I think, for the pound against the dollar. New highs for 2020. Euro US dollar hit a 2.5-year high. I have been sitting on some trades in those, both in the Capital account that I use for these videos and in my own account for a long time. And finally it delivered over the last couple of weeks or so. So we'll have a look at those in a bit more detail and see what it means. Okay, let's take a look. Let's get onto it. Let's start with stocks first of all. Let's start with stock markets. I think these are always pretty easy to do. We did the video yesterday on the S&P, and I did a trade on the S&P on the back of the video. It's slightly underwater. Here we go. So I bought it at 37.24, and someone in the comments said, "Well, why didn't you wait till midday to buy it?" And which is a fair enough comment. But when I do the videos, the pre-recorded videos, I do like to do a trade, so I like to buy it wherever it's trading. Really, in this instance, and I was really looking for a longer-term move. So here's the S&P 500. You cannot argue with the strength of this market, or I can't anyway at the moment. Just today, 9 o'clock this morning UK time, the S&P traded up to 37.34, which was another all-time high. Okay, so it was out of market hours. It hit an all-time high, but it hit another all-time high. Incredible trend in this market. If you watch the video yesterday we put out yesterday, I spent 10 minutes talking about the S&P. But in a nutshell, clearly that trend from March, the lows in March, is still up. Although we've only got a couple of touches on that trend line. Lots of support around 3,600, which was the previous breakout area, sort of here, around here. Spikes down. Lots of support at 3,500. So for me, any weakness at the moment on the S&P looks like a buying opportunity. It has been pretty much obviously defying gravity for some time now. But what can you do? You can't argue, or I can't argue with this sort of strength. I'd rather go with the trend than try and call a top in the S&P. And I think I said in the video this week, about 20% of the S&P weighting is Microsoft, Facebook, Amazon, Apple, Netflix, and Google. So there's a massive skew, obviously, towards the tech stocks, and we know that tech has really taken this market higher since the March lows. If we see a shift around in sentiment towards tech, clearly that's going to have an impact. But for me, on stock markets, it was only less than 12 hours ago this market set fresh all-time highs. You're a braver person than me if you call the top in that market. Nasdaq, same again. Nasdaq, fresh all-time highs out of hours, it looks like. Let me have a look. Fresh all-time highs just in the half hour before the open today. So the Nasdaq 100 traded up to 12,800. There we go. It's turned around a lot today, so maybe we'll see under a bit of pressure early next week. But again, Nasdaq, like the S&P, I don't want to argue with this trend, and that trend is most definitely up. Keep the any requests coming in for markets to look at, and we will look at them at the end. So I've seen a few for Tesla already, so we'll have a look at those at the end, definitely. Gold. Now gold. Here's the chart of gold. I think gold is a little bit boring at the moment, but we've got this trend. If you watch our regular gold videos, we normally do 2 or 3 a month. We've got this trend from August 2018. That trend is up. We saw all-time highs in the summer for gold at 2,075. But since then, we've just been, this correcting phase. And I would say nothing that's happened this week, even though, well, not this week, this month, let's say, even though we've seen a bounce from 70.60 to about 18.80. So we've seen a $120 move this month. Doesn't really change this correction yet, I don't think. So I think we could well see gold continue to drift a bit from here. Longer term, definitely still a buyer on gold. But at the moment, since these August highs, we have just been in this correction mode. So I don't think there's too much exciting for gold at the moment. It wouldn't surprise me if, over the next few days, few weeks, we slip back to 1840, maybe something like that. I think if we can break through the old sort of the mid-November highs, 1900, you can see it stopped there yesterday. Where did it get to yesterday? 1896. Break through 1900, it gets a bit more interesting, but it still looks, quite corrective, I think, at the moment, gold. Now, silver's it's had a really good few days. I mean, look at silver this week. If we went back to the 14th of December, silver was $23.80. Yesterday and today, it's breached $26, so we've seen, what's that, a $2 plus move for silver. So not quite a 10% move, but an 8% move for silver. And it's interesting and it's quite exciting, but it doesn't really change yet anyway. This sideways move we've been in since September. So I suppose the really aggressive trade on silver is to be a seller up here, because we've pushed back up to 26. That's been a problem back here in November as well. So I think it's maybe an interesting one to watch next week. I think if it can start to build on a base through 26, then it starts to look a bit more interesting. But at the moment, you can see it on the dailies. Let's have a look on the hourlies. It just keeps getting knocked back. You can see it up here, November the 9th. It's having a few goes through 26 and it just reverses really quickly. So I think next week could be interesting. I think I do have a silver trade on anyway, so I'm not trying to talk it down for the sake of it. Here's a silver trade I did in a video on the 21st of September at $24 an ounce, and it's up obviously slightly. But I just wonder if at the moment we're just, even though it's been quite a big week for silver, we're just seeing the normal chop. So I think we really need to start trading through 26 properly on silver to make things a bit more interesting. Let's see. And Bitcoin. Here is Bitcoin. I think I've said on often previous occasions, I hate cryptocurrencies. I think in terms of, it sucks people into trading, thinking trading's easy, and then you have you have a couple of months like we've just had in Bitcoin, and you think, well, this is easy. I've just doubled my money in a couple of months. How hard can trading be? Plus, of course, I do have a trade on. We did do another trade on Bitcoin. Here we go, on the 16th of December, in the last Bitcoin video that I did on our channel, and did buy in at 20,250. So we are up 10% on that trade. It is a fascinating market, absolutely nuts, obviously. But I think it's really interesting that it's managed to break 20,000 this week. If we look at, clearly, I think if you've watched markets for any time, you'll be aware of the mania in late 2017 for Bitcoin that ultimately saw it trade almost as high as 20,000, then just fall off a cliff. But we're back here, and I when we see previous levels break and hold, it can suggest that perhaps a new trend is underway. So if for me, I'd be a buyer of Bitcoin up here. The question is, where do you put your stop loss? I mean, clearly, we put the order in on the video. I put an order in to buy above 20,000. You can't argue with that trend. The trend off the mid-October levels. For me, at the moment, the closest I would want my stop, if I was a buyer at 22,750, the closest I'd want my stop is the other side of 20,000, which is only where it was 2 days ago. So, the problem is with volatile markets like this, you need to give it some room. Perhaps a better place for a stop is the other side of these lows just before the break at 17,500. So it's really interesting. But of course, there is this change coming, at least in the UK, from I think it's from January, isn't it? That the FCA, the regulator in the UK, won't let you trade cryptocurrency, CFDs or spread bets for a retail trader. So it's really interesting what effect that may have on the market for Bitcoin. It may have no effect, but I do wonder how many people who are trading this and providing volume to it are trading it in leveraged instruments, and are they going to find it harder next year? I don't know, but it'll be an interesting one to watch. It's same for us as well. I've got this trade here on Bitcoin, but it will be closed out automatically for me by Capital whenever this rule kicks in next year. So it's interesting that the change that we're seeing there. Let's talk quickly about crude oil, then we'll look at the currencies because they are really interesting. But crude oil is interesting as well. But I mean, look at the moving crudes. Everyone, I did the video earlier this week on crude, and I do a bit of research. We did the videos. There's loads of really bearish talk about crude oil for next year. And the state of the economy and blah, blah, blah. Look at the price of oil. God, if you'd have bought crude oil a week ago, you're up you're up $3 a barrel. Thank you very much. You're up 6-7% in a week with very little stress, because you can see, look, we've got just this row of blue candles. Just goes up every day. So great trend in crudes. I think in the video, I think I put an order in to buy it. Here we go, to try and buy it at $46, but it didn't get filled because the price didn't really look back. So that order did not get filled for crude oil. But I would definitely be a buyer on dips. We're now on crude at $49. We're back to where we were in February of this year. It's a real comeback. Particularly the cash price traded down to 10, and it's increased almost fivefold. The cash price off the lows since April. So really interesting. At the moment, $50 for crude. I would definitely still be looking to be a buyer on weakness on crude oil. If we flip this over to an hourly chart, we can see the rise with that really, that sharp sell-off here in November, gaps to lows below $34 a barrel beginning in November, and here we are now threatening 50 a barrel. Massive turnaround. Great trend. A great trend up for crude, as you can see, off those lows. So for me, where are the levels to watch next week? Well, I suppose really tight levels, $48, which is the low from yesterday. Then support at $47.30, big support down here at 46, big support at 45. It would be good if we got a bit of a knee-jerk sell-off reaction to something. I think that would be a buying opportunity in crude. But I've been really surprised by this trend in the last few weeks. But again, it's another trend you can't really argue with, in these markets. If you follow our videos, or you have been for some time, I've had these trades in here in the Capital account for ages. Pound against the dollar since the 30th of September. Euro against the dollar. There's been a trade in there since May, buying at 109.80. The market's currently 122. So we made, 1,300 points on that trade. But finally started making money again this week, these markets, as they move higher. Let's have a look at the euro first of all. I think the euro is really interesting going into next year. I mean, clearly we have all the Brexit stuff going on at the moment. But this is euro dollar with this really boring time from July pretty much through to end of November. So we had July, August, September, October, November, 5 months or 4 months where the euro against the dollar was going nowhere. And then over the last few weeks, it's really built some momentum. And, just in December, it's gone from, where's it gone from? About 119.50 as high as about 122.70. There we go. So we've seen a 300-point move. And I do wonder if you go back on the euro, I mean, we broke, I think the break through the summer highs was a good signal. That move there was a good signal, early December. Now, for me, I think the next target is a run back up to these 2018 highs maybe at 125. So I still think there is some upside to come on the euro, but I wouldn't buy it blindly. I think a bit like oil, we've had a bit of weakness today, you can see on the chart. If you look at the RSI down here, really overbought on the RSI. It has been since early December. If we get a bit of weakness early next week, it looks a really interesting trade, I think, up at these levels. So I would definitely be looking to be a buyer on dips for euro, US dollar. And of course, what's been driving it, to go slightly off topic for a bit, is the dollar index. If you trade currencies, definitely have a look at the dollar index. It's DXY. It's the dollar against a basket of different currencies. And you can see it's gone from 104, the dollar, in March, to 90 today. So it's lost, what's that, about 14-15% since March. And it's making 2.5-year lows. This is why we are seeing the euro higher, the pound higher. Well, one of the reasons why. It's obviously helping Bitcoin as well. It's helping gold. It's helping silver. So we're seeing a real, you can see quite a pronounced sell-off. These 4 candles this week. 4 candles. That's one for the 2 Ronnie's fans out there. But sells off this week. Big move down. And clearly, of course, we're seeing the euro and gold and everything else get lifted for that. But maybe it's been overdone. We'll see what next week brings. Pound against the dollar as well. If I flip, lots of volatility for this one, obviously, with the Brexit talks. It wouldn't surprise me if we had some sort of Brexit announcement on Sunday, and then Sunday night when the markets open, we get some crazy moves, because that's what happened last week. We saw quite a big move in the pound on Sunday night. Clearly, the markets shut over the weekend, but the politicians are still talking. So yesterday, we saw the pound at 136.20. And again, just over the last week, it's a 500-point move in the pound. But that trend in the pound has been up since those lows. But the pound yesterday traded to its best levels, again, since about May 2018. Breaking, you can see what a problem 135 has been in the past. December last year, August this year. Is this finally the break? Or actually, is it time to go short again? So I think there are definitely, if you thought the pound was overvalued, it's a great place to go short up here, with a stop above yesterday's high. So lots to watch out for. But personally, I would still be tempted to be a buyer of the pound on weakness. Although I do think that dollar move, that dollar weakness this week has gone too far. So it wouldn't surprise me if we saw it snap back a little bit next week. So loads to watch next week. Stock market's still strong, although perhaps a little bit boring day to day. Gold, I think that is going to run out of steam again next week. Silver, can it break 26? Not so far, so it still looks a little bit boring. Bitcoin is strong on the breakthrough 20,000. Crude oil, again, you can't argue with that trend in crude oil. Looks like it's heading for 50, looks to be a buy on dips. Pound against the dollar and euro against the dollar, a great week. I think they're still strong going into next year, but perhaps their strength has been overdone a bit this week. So even though it's the week before Christmas, lots to watch. Right, let's get back to the comments and the questions, and we'll have a look. So what do you think about gold? We did that. Please mention Tesla. Here we go. Let's have a look at Tesla. Tesla. I have a confession to make. I have bought a Tesla. I picked it up yesterday and had a slow puncture within 50 miles. Obviously, I can't blame Tesla for that as much as I'd like to. So the man came and fixed it today. It's very good, but very strange. But onto the Tesla share price. Absolute nuts. Tesla share price. All-time highs again today for Tesla. I mean, I think it is a bubble. But as we know, bubbles can run much longer than we expect them to. Because now Tesla is the largest car company in the world. Bigger than Toyota, bigger than Ford, bigger than General Motors. Does it justify that on its sales? No. But it's a bet, isn't it? It's a bet on Tesla continuing to dominate the electric vehicle space. The same way, I suppose, if we looked at something like Apple 10 years ago, Apple's shares were just going ballistic, or however many years ago. Look at if we go back to 2019, or we go back to whenever, go back to here. 2018, Apple shares were $55 a share and had been going up for years. And now they're more than twice as high again. So it's, again, that they have continued to dominate. And that's what the Tesla share price is, I think, for me anyway. It's a bet. Are they going to continue to dominate the sector? Who knows? But you cannot argue with that strength. So this trend going back to, if we pick up on this, hang on a second. So we pick up on, let's do the usual. If you'd have bought them this time last year, what could you have bought them for a year ago? About $75 a share after the share split and everything. So you'd have made almost 10 times your money if you'd held them for a year. But here's the trend off the March lows. It's a great trend. We do have a few touches on that trend line. If we bring in an RSI, I do think, again, it's overextended, but we know with these crazy stocks like Tesla, the market can stay illogical longer than you can stay solvent if you're trying to short it. But let's put on a 10-day RSI on that. There we go. Really overbought, as you can see, Tesla, but I wouldn't go short. I suppose if you wanted to be really aggressive, go short up here with a stop above $700. And if it blasts through $700, get out. But I'd still be a buyer on weakness. Loads of support from 300 through to 400. Again, it's gone a little bit parabolic over the last month, it feels. But that's Tesla, isn't it? Absolutely crazy. Crazy stock, still strong. I think it's a bubble. But who says it's not going to be $6,000 a share in a year's time? I doubt that, but you never say never with these things, do you? I would not want to go short. Someone said Airbnb. Airbnb was the recent float, wasn't it? I have not looked at these at all, Airbnb, so I've got no idea. We have got how many days of data? 7 days of data, because of course they only came to the market quite recently. Based on that enormous chunk of historical data, I'd be a buyer personally of Airbnb. Oh, should we buy them? We haven't actually done a trade tonight, have we? Let's set up a trade for Airbnb on the very little data that we have. So when they first came to market, they were really knocking their head at $150 a share for a couple of days. They traded down to 120. They've come back. We have had a breakout through 150. So let's say I want to be a buyer. Where's the tightest I would put my stop? Probably at 140 looks like a good place for a stop. Let's do that. So let's buy. So where are they now? 158.42. So the first thing I do, put my stop loss in at 140. I only ever risk 100 quid when I do these live trades. They don't go crazy. But let's do seven shares at 158.48 because they've broken out through their initial opening days range, and I'm going to buy them up here. But if they drop back to 140, I'm out. Let's place it. There we go. We bought 7 Airbnb. There we go. If they go up tenfold over the next year, I'd be very happy. But yeah, it looks strong today. But I think from a technical analysis, a trend following charting point of view, it's difficult when we've only got 7 days of data. But strong move today. We've done Tesla, Airbnb, natural gas. Oh, do you know, I missed the trade, I think, this week in natural gas. Oh, maybe not, actually. Maybe not. I find natural gas a really frustrating market. I think I spoke about it, I think, maybe a couple of months ago, that I'd look back. I'd done 8 trades in natural gas over the year. 6 of them had been losers. 2 of them had been winners. And I was about break even because I had a really big winner. I think it was this move here from July to wherever. I think it's really interesting looking at the cash price of natural gas at the moment because it's come back. I'm a big fan of following trends. It's come back to the trend line. It's also, we had this good support for natural gas. You can see it. So for me, the support is more important than the trend line. Good support for natural gas, $2.40 in August. Whatever that is, $2.45 in September. Has a little look through, you can see here. Doesn't break, and bang, away we go. I would be a buyer of natural gas. I would probably wait till next week. Let's see if we get a bit of a push lower. But personally, I would be a buyer of natural gas. Clearly nothing today is financial advice. I get it wrong as often as anybody. But for me, looking at the trend, it's looking to see if this trend holds and perhaps stops the other side of the August lows, mid-August lows at 220. I think it's a really interesting market, natural gas. It's an odd one. There's not much interest in it. from people who review YouTube videos. So we don't do it very often, but I think it's a fascinating one to watch. It's really volatile. So I think it's a really interesting one to watch over the next few days and into next year. Gas. What else have we got? FTSE 100. How much do you think the FTSE 100 will move with a no-deal Brexit? Good question there. I've got absolutely no idea, to be honest. I don't know. I wonder. I do think we'll get a deal, and I think it will be a last-minute, pull-it-out-the-hat deal. But you're right. If we didn't get a deal, then that has to, even short-term, I think the market I would watch would be the pound. And I would use that initial, I'm guessing, a negative reaction to be a buyer of the pound, because I think it will overreact, the pound, to a no-deal Brexit if it happens. But looking at the FTSE is a really strange market, isn't it? I did this S&P video this week. I think the S&P is up 14% year to date. The FTSE is down, I think, about 3%. No, it's more than that. It came into this year at 7,500. The FTSE is down about 13% year to date. If you'd bought the FTSE at the end of last year, you're down for the year, but you're up on the S&P. The FTSE is a really strange market. And I don't know. I never know. You have these moves, and then it just goes really boring again. I suppose I could be tempted next week. Oh, so you could argue the trend is up, couldn't you? But I could be tempted to be a seller. The risk reward is better to be a seller with a stop over the highs. But I have to say, hand on heart, I don't think I've traded the FTSE for years, because I think it's a really odd market. And we do have some bearish divergence going on where the market's pushed higher, but the RSI is falling on the FTSE. So I could be tempted to be a seller of the FTSE with a stop above that high from early December. But I do think it's a bit of an odd one. Bitcoin, we looked at Bitcoin. We've done that one. So we've done that. Cocoa. I do have a trade somewhere else on cocoa, actually. I think it's taken a bit of a hit today, hasn't it? Cotton is another interesting one as well, actually. But I was taking more. It's a bit. I don't even know. I have a trade on that, to be perfectly honest. I think the longer term trend is up on cocoa if we went back to 2018, but it's been a bit odd lately. I think I was looking. I don't think I bought it down here, but I should have done. I would be, at the moment, it's not a market I really understand, and I just trade it off the price. I would wait to see what happens next week with cocoa, because there's lots of support coming in around 22 to 23, and we're still a bit above that. So let's see what happens. I would maybe wait till the new year to see what happens, but I would be tempted to be a buyer of cocoa in the new year, just basically off the strength of this 3.5 year trend in cocoa. But clearly you want to be a buyer more, if we can, around 23 rather than up here at 26. I'm not sure where my trade is on it, but it's not going brilliantly at the moment. Cocoa, we did cocoa. Gold, we looked at gold. Considering that the US market is more than 85% services and they are lost when not consumed, there and then, how those losses will be recovered, if ever. I don't know, but I think this is the problem, isn't it? If you look at the fundamentals of what's gone on this year, look at a worldwide virus that has come back with a vengeance, particularly here in Europe, still cannot stop the US stock market going up. What would it take to stop the US stock market going up? It's like an alien invasion. The S&P would go up 3% or something. You just can't deny the strength. So I get completely what you say, but I don't think you can apply logic to markets. I gave up trying to apply logic a long time ago. Look at the price of oil, up 400% since March. The price of oil, clearly it fell off a cliff. I just look at the price. But you're right. I mean, clearly that the S&P is skewed because of the tech stocks. So we looked at Tesla. We looked at cocoa. Gold is boring. Yep. Do you recommend the awesome oscillator? I don't know. I've never used it. Where is it? Is it in? There we go. The awesome. I mean, this is a real bugbear of mine. Is these days you have so many different indicators, and of course you end up just not even looking at the price. So here is the awesome oscillator. I have got no idea what it is, to be honest. So I don't use it. But again, if you use it and you make money, good luck to you. So I personally, I mean, I'm a big fan of following trends, which you'll know if you watch the videos. I will look at an RSI and a MACD now and again. I like Bollinger Bands for volatility. Let's put some Bollinger Bands on the S&P. Here we go. You can see actually, look how volatility. I like them just almost as a visual gauge of how volatile we are at the moment. And you can see, even though the S&P has still been going up, look at the change in volatility this month. Very tight bands compared to where we've been typically. So volatility is really dropping off to the end of the year and back here when the market was going up. So yeah, I don't think you want to be using too many indicators if you can help it. Let me show you cotton. I mentioned cotton, didn't I? I don't know if we covered cotton. Oh, here we go. It's been really, again, this is not financial advice, but look at that trend on cotton. I mean, who knows anything about cotton? I don't know anything about cotton. I mean, that could be the price of oil, couldn't it? It's just a great trend. You know, we've seen this fantastic move. Let me get the Bollinger Bands off in the price of cotton out today to its best levels since 2019, so a year and a half. I've got absolutely no idea why it's going up, but it's been a great trend. So I think some of these perhaps less popular markets, as long as they're liquid and you have a decent spread, they can be interesting. I think like platinum, I think there was somebody on last time who was quite a fan of platinum, and that has been, it feels like it's trying to get a move on, but it's not platinum. So I think there are some interesting markets slightly out of the mainstream. So let's see. What else have we got? Russian roulette. Someone's saying Bitcoin is like Russian roulette, cryptos. I think you're way too bearish on gold and silver. I think they're ready to explode up. Just waiting for US to pass a stimulus package. Yeah, well, there you go. It's two opinions is what makes a market. I don't think they are. I don't think there's no, I mean, I would say, well, we'll see, won't we? But I would say there's no surprise. You know, if we get more stimulus from the US, that's not going to be a surprise. So I would say, isn't that priced in already to the price of gold or the price of silver? I don't know. But let's see what happens. You know, I haven't got a crystal ball. But fair point. You know, we can all have different opinions. We'll see what happens next year. All commodities going up. Yeah, that's true. Copper has had. We looked at copper before, didn't we? And that's another one. Look at that. Another mark that, again, not many people will talk about so much. Absolutely great run in copper this year, and it continues. You know, even as we're doing this tonight, copper is pushing out to its best levels since 2013. So it's 7-year highs on copper at the moment. We did do a trade on copper, I think, in a live stream a couple of months ago. But you know, great trends. I mean, I've got some trades on copper, a couple of trades on copper. I'd rather be a buyer on weakness, of course, but the risk is you wait for the weakness and it never comes along. But it's a really, really interesting market. Let's see what happens. 23. Someone's talking about Bitcoin. Hang on a second. I've just lost my space. Dollar index through the floor. I think it's interesting, the dollar index, because people again are so bearish. Everyone is bearish the US dollar, you know, and at the moment you can't argue with that, because pretty much all it has done for the last month is go down. But I do wonder next year, the same way, you know, oil is gonna, it looks like it's gonna hit $50 a barrel, and everyone thinks the economy's really bad. Will oil be the comeback story in 2021? And this time next year, I'll be doing this thing saying, look at this massive recovery we had in the dollar index. I don't know. But I think from a contrarian point of view, it's quite an interesting one to watch, because nobody seems to have anything good to say about the US dollar, which is exactly the moment the market comes back. Is the Tesla car good value? No. In the UK, you get tax breaks if you buy one. But it's interesting, but I think they're expensive. But they're still selling them, aren't they? And the share price is going up. What else have we got? Airbnb, we looked at that. Airbnb, S&P. Oh, Suncor Energy. I must admit, I'm not familiar with that one. Suncor. There we go, Suncor Energy. So look at those. Okay, here it comes. Here it comes, I think. That is back, isn't it? I think we're back. I've got no idea what happened there, but everything sort of died at my end and it came back a bit. So I think that all looks okay again. So sorry for that. I'll carry on. I don't think I can see any questions anymore, but I'll try and watch it on another screen. What was I talking about? I've got no idea. Let me have a quick look. So we talked a bit about some of the commodities, didn't we? And platinum. We looked at Suncor Energy. There we go. I've got my brain back. Suncor Energy, massive volatility. But you could say overall sideways, couldn't you? From 10 to 22. I mean, massive swings. And it's at 17 at the moment. So for me, I don't know. I'd rather wait and see. If it sells back off down to sort of 12, 14, it's probably not, for me, it's not one that would fit with my trading approach at the moment. But we'll see. We'll see what happens. Let me have a quick flick through some of these other questions, and then we will try and wrap things up. Sorry about the problems this evening. It's weird. We had one a couple of weeks ago as well. It just seems to go dead my end, then comes back to it. Let me have a quick look over here. Okay, we did Suncor. Okay, so I think if I scroll back, Palladium. Let's take a look at Palladium, and then I will start wrapping things up. Palladium was a great trade last year. Absolutely fantastic trend last year. And a bit like platinum, it feels like it's trying to get going this year, but it's not. I started trading Palladium only because of some of the live stuff and the YouTube stuff we did last year, because it was such a brilliant trend. You know, even if you didn't get in till September, when it broke out through 1600, it ran up to 2,800 in March before falling off a cliff, and clearly it really did fall off a cliff. I do have some trades on Palladium, but it hasn't really gone anywhere lately. And it's one of those where I am being patient because the trend is still up. And you can see we're gradually going up on Palladium. And my target would still be a run back to 2,500, and I'd be happy to buy on weakness below 2.2. But we'll see. We'll see what happens. But it's perhaps not as exciting as some of these other markets in recent weeks. So we'll see. But what I'll do, I'll start wrapping things up there because it is a Friday night, and I'm sure we've all got beers we want to drink, and I saw someone said cigars that you want to smoke. So I'll wrap things up. But if you have any questions, drop me an email. The next one of these, we are going to do these, I think, twice a month. Clearly, we won't want to do one next week because it's Christmas Day. Not even I am that sad to want to talk about markets on Christmas Day. But we will do it again. I think the second Friday in January is when we'll resume again. So if you're subscribed, you'll get a notification. But if you drop me an email, if you have any questions, david.jones@capital.com. You can follow me on Twitter @JonesTheMarkets. Don't forget to go to Capital.com to find out more about trading with us, our spread bet product, download our app, all that sort of stuff. And if you haven't subscribed to us on YouTube, subscribe on YouTube, because even though we're not doing any more live streams for a couple of weeks, we'll still be pushing out, I think, 3 or 5 videos before the end of the year. So I think we're probably doing one on FX next week, one on Bitcoin next week, some strategy stuff in between Christmas and New Year, then back to normal in January. But thanks very much for watching. I've got no idea if anybody's there because it's all died at my end. Thanks a lot for coming along. I hope you have a good Christmas, a good holiday, whatever it is for you, and we'll see you hopefully on these live things again in January.